Good evening, everybody. All right, hope everybody's having a nice. Oh, it's late March already. Late March, and we're expecting another inch of snow here tonight. 76 degrees, isn't it? Always 76 degrees or 67 degrees in Seattle, and sunny. Yeah. All right. As we saw, today was another indecisive trading day, and this market really doesn't give us any direction, which is exactly what the market's telling us. It doesn't have any direction. So as you can see in the morning and afternoon comments, this is why it's recommended to be both long and short in this market, because there is no direction that's going to help your longs, and there's no direction that's going to help your shorts. And we don't know which way they're planning to take this market. But right now, if it's moving sideways, you're always going to have good long positions available, and you can always have good short positions available. So the Dow was indecisive. The transportation index was indecisive, but both of those had dojis right on basically the T-line area. It was the S&P that was showing a little bit more selling, not a signal, but just more selling. And then obviously the Nasdaq was getting cratered today. But as we can see, it's been somewhat sideways until today, where they took it back down to the 50-day moving average. So, do we know which direction this market's going to go? Definitely not. But at least we know what to prepare for by how they open this market tomorrow. Simply, if we see the pre-market futures open lower, so we know that that we're going to move in the direction how they open it, which would kind of imply that if they're opening the Dow lower, they're probably going to be opening the Nasdaq lower, which means it's not going to hold the 50. There's still some more selling. So at least we're prepared, or should be prepared. Oh, that's just great. For what to expect based upon how what the pre-market futures look like tomorrow. So let's take a look at a few of the commodities. Crude oil is stuck between 104 and 98, and it'll probably be here for a little bit. Let's see, interest rates kind of also moving sideways. No real great trend one way or the other, so that means interest rates aren't going to be moving very much. Gold pulling back, probably to the T-line, or not the T-line, but the 50 and the 200, and see if it bounces back up from there, which means silver is also pulling back and probably has a gap to fill down here before they hit bottom. The dollar popped there a little bit the other day after the Fed announcement, but then starting to ease back. Let's see what the euro is doing. Euro slow uptrend, and it closed right on the T line after a left-right combo, which would imply that there's probably going to be more upside, especially if they open this positive tomorrow. The Japanese yen, absolutely nothing there that would make you want to be long or short or trading that one at all. And let's see, soybeans, that one's stuck in a wedge, not going anywhere. Oh, what did I say? Cotton? That's not what we wanted. That's next year. Cotton took a big wallop today, but wasn't in any mode. Well, this is a perfect example of why you set your stop at a point where it shouldn't be trading back through. So if it came back through the open of yesterday and the T line, probably wanted to be back out of it. Let's see, corn. Corn is still sideways. As you can see, though, it's come out of a fry pan bottom. It's hovered right here on the 200. Now it's done a little Morningstar signal. You can be buying this if it shows strength because it'd be breaking out through using the 200 as support. Morningstar signal at the end of a flat trading area usually creates a slingshot effect. That's on corn and wheat. Wheat, steady uptrend. This one you stay with. And coffee was what I have been long. That's not what we want. We want KACA4. Popped up a little bit today. However, it closed right here at the 3T line. Stochastic's still not in the oversold area. So we'll give it one more day. If they open it higher, you close it out. If it trades lower, they're still taking it down, with the likely prospect of still taking it down to the 200-day or down to the 50-day moving average. And the one that has been eating my lunch ever since I sold it here and went like this, now we're starting to see sell signals. So I just shorted this one in the after hours. It's back to the T line. Now we need to see whether they're going to take it back up or whether there might be a Fibonacci retracement. And this is where you kind of throw your Fibonacci numbers on. Say we use the Morningstar signal as our low and our high. First target would be the 20, then your Fibonacci numbers, and then could be that your 62% retracement would coincide with the 50-day moving average. So just kind of targets to watch for. Okay, let's see what else is there. Is there anything else in the commodities area? Good interest rates. I don't think there's anything of any. Cocoa might be a good short, but it's going to only come back to the 50. Sugar is probably getting near the bottom. Can't think of anything more. All right, so if we're in a market right now, it's going sideways. First of all, I want to show the example of our trade on AMRI the other day when they knocked it down and brought it back up right to the T-line area. It's a different chart over on the TCNet, but it was a doji. Then today they traded it positive, which meant just because somebody downgrades a stock, that doesn't necessarily mean it's a sell signal. Just if it's a downgrade, all it is a change of supply and demand for the day. So just watch this, because what was our pattern in the first place? A J-hook pattern. Just because somebody announced a downgrade doesn't necessarily mean that was the overall opinion of the stock. What else do we have? GTAT needed to close back up above the T-line, which it was close enough to say it did close at the T-line, and made it very simple for tomorrow. It needs to open positive and trade positive to stay in it. If it opens lower, you just close out the position and wait for the next buy signal. OESX is another position we've been holding. It needs to open positive and trade positive tomorrow. Make this a little bit bigger. So got a kind of a dark cloud. So to confirm, it would open lower and start trading down. That's when you close it out. And live. Everybody was asking about live. Live has still got the pattern set up where it's come back to the 50, did the Morningstar. Even though it's been a little bit soggy in here, stochastics are still heading up. You're still staying above the 50. You're right here at the T line. I'd give it a little time. This is the area where they're bottoming it out, and you're going to start seeing some buying. So don't. This is why I usually have 10 positions on at a time, because this one didn't tell me there was anything wrong. It just wasn't moving right today. So it wouldn't have bothered me that much because I had other positions that were working out well and keeping the account positive. PES closed above the 3T, so there's nothing there that. Now you do have a left-right combo. Makes it very simple. You want to see it trade positive tomorrow. If it opens lower, worst case scenario is it's going to move back down to the T line. But we're still in this J-hook pattern. Same scenario with PEIX. Backed and filled a little bit today, but didn't change the overall direction. Malcolm, I wouldn't be too anxious to jump out alive. Remember, we're buying the signals and patterns. The fact that it's come back here and wobbling in between the 50 and the T line still tells me there's bottoming action here. Now, if it closed below the 50, which means it completely negated that signal, then I'd close it out. But as of right now, all it's done is moved up and moved back to the 50. Just didn't get. We're right now in a stutter step. If it opens positive tomorrow, you can still be buying. Let's see. What does it say? You have 10 positions in your account. Is it on the same instrument? Is it on the same instrument? On the same instrument. Oh no! If I have an account, I usually have, and if it's a stock trading account, I'll usually have 10 stock positions. If it's my little trading account, I may have approximately 10 positions, which include both stocks and options. Let's see what else we got here. GGAL was also staying strong on another J-hook type pattern that started off with your doji sandwich. So this one, you stay long until you see a sell signal. Oh, a few that were a little bit iffy. BWEN sold off today, but notice it came right back up and closed above the T line. But this still means it needs to open positive. If it opens lower and trades lower, that tells me the sellers are still in control. Then you close it out, pretty much telling us you got a double top here instead of a J-hook breakout. And TGTX, we did close out today because it closed below the T line yesterday. It needed to open positive and trade positive to stay in this trade channel. Closed it out as it was trading down. And we'll buy it back if it comes back up positive, back up through the T line. Because this is a signal that's telling us that the bears have knocked it down and the bulls have stepped back in again. Let's see. Just started to pick up CONN because it was a short. It looked like a dumpling top. Had it broken down through the bottom here. However, now it's a slow curve coming back up. So with it doing a doji sandwich, let me make this a little bit bigger. Doji sandwich up above the T line, you could get some running room. If it came back up to this area, that'd be at least a decent profit. Then if it broke through there, you've got a good upside potential. So right now, long with as long as it stays above the T line. And let's see, short a few positions. There's that dumpling top, and this one isn't holding up here at the support level. So there's a good possibility this one could keep heading down. This is GNC because it was a left-right combo right here on the T line, and then it's never been able to get back up above the T-line. So this one, you stay short until you see a buy signal, with the prospect that if you came out of a dumpling top, let me make this smaller so we can see it better. This is where you observe the obvious. The obvious is you're in a downtrend. You've got a bottom of the downtrend and a top of the downtrend. So if they sell this off, there's a good likelihood they could bring it back down to the bottom of the downtrend, which would bring you down here in about the $37, $36 area. And TNP, still on the long side with this one. Ever since the kicker signal, just stay long. Still kind of doing hopefully a little J-hook type pattern. And also short DK. I bought the stock, or shorted the stock and the options. Sold the stock, but held on to the options. And because it had a kicker signal, it came back up and closed above the T-line. Now it can be re-shorted. Same scenario on this one, where you might have a trend channel in progress here, which means your downside potential could be down here somewhere, hitting the bottom of the trend channel. All right, good, James. And let's see, what else do I got? Okay, again, a lot of people are asking what goes on in the option trading room. Again, we set up the option trading room so we wouldn't be talking about option strategies in the regular chat room, to kind of take away from the analysis process of candlestick charts, getting over into option strategies. So the type of thing we do over in the option room is, for example, this is Apple. And Apple broke through this downtrending channel from a wedge, gapped up. Makes this very simple. If they open this positive tomorrow, you definitely want to be a buyer, because they've broken out of this downward resistance level. So looking at some of the calls might be too expensive. This is where you put on a spread. And so the calls are pretty expensive, but the spreads make a lot more sense math-wise. So I think we looked at today for the March, April, even though it's still fairly early. If we think we're going to have a good strong move here for the next few weeks off of Apple, then instead of just buying the calls outright, I think the math worked best on buying the 545s and selling the 555s for like $3.03, which means that $3.03, if it closes above 555 on whatever expiration day is in April, then your $3 has gone to $10. So you make a 3-to-1 return. Yeah, this would be a debit spread. Do you have a day trading course? I think we do, DK, and it's in the video somewhere. We could always do a day trading course again one night in here. When you see a downtrend below the T-line, such as GNC, does it matter that it's already oversold? Wouldn't you prefer it to be in the overbought position before you go short? Again, that comes back to knowing what your patterns are telling you. GNC had this dumpling top, just like a fry pan bottom. Where do we usually buy in a fry pan bottom? When the stochastics are in the overbought condition. That's where it's breaking out. Same scenario on a dumpling top. Where do most people start panic selling? When the stochastics are already down in the oversold area. There's a day trading course coming up on April 1st. Okay, I better check my schedule. So anyways, the difference between buying a signal and buying a pattern is a pattern is usually going to start really taking effect when the pattern's already up in the overbought condition. That's true whether you're looking at a fry pan bottom breakout, a slow curve breakout, a J-hook. Any of those usually have are going to be occurring when the stochastics are in the overbought area. Debit spreads. Usually, I do debit spreads anywhere from 2 to 3 weeks prior to to expiration, and the reason for that is your maximum return is going to come as close as you can get to expiration, because that way all the premium is out of both sides. So, and if you're doing a spread that has a $10 difference on expiration day, if they're trading above that top level, it should be a $10 price difference. Prior to that, you're going to have a premium built into the lower call, and you're going to have a premium built into the higher call. More than likely, if it's been moving up, the bigger premium is going to be in the higher call. So that means you're not going to maximize your profits until you get right to expiration day. On GNC, can you sell a calls credit spread and buy a put debit spread? I think you'd probably do it the other way around, wouldn't you? You buy the call debit spread and sell a put credit spread. No, I don't look at volatility, because volatility has nothing to do prior. The chart pattern is going to tell us there wasn't volatility until it breaks out. How do you all know about the course? It must be listed somewhere. Yeah, if you think GNC is going down, then you can buy a put spread. Okay, let me zip along here. So, anyways, that on Apple, a lot of people will say, "Well, what do you do in the other chat room?" We'll put together strategies, the correct strategies for the right trades. Buying a call with Apple going up may not necessarily be the best trade. Buying a call spread may be a much more effective way to do it. And what it boils down to is, we've seen some of the people that have done sessions on Thursday nights, is as long as the math works, that's what you should be trading. Not the instrument, but using the instruments effectively. Okay, let me see what else we got here. All right. We also, in the chat room today, mentioned BONT, and this will probably be recommended today. Notice that we had that slow curve, and where did the slow curve end up on Friday? At Doji, right smack dab on the 50, and it opened positive today. That told us two things. It told us the slow curve is performing, as well as the 50 not acting as resistance. They gapped it up, and where did they close it? Above this level right here. That tells me my next target is probably right up in here, which coincides with the 200-day moving average. So you want to use the T-line as support, and this is why you want to get out of situations when the T-line is breached. If you see a left-right combo and closing below the T-line, that's trouble. Close it out. The worst-case scenario is it opens positive the next day and trades positive. You can buy it back, but why take the risk? Because if it closes below the T-line, the probabilities are strong that there's going to be something negative going on. STAA, another one mentioned today. It's had a gap up. It's had consolidation right back to the T-line, then a kicker signal. There's your kicker signal that you could be buying on positive trading tomorrow. Whoops, who took my pen? Throw a little star next to that one. And CBK. Another little slow curve that's closing right here at the 50-day moving average and the 200-day moving average. Makes this very simple. If they open this positive tomorrow, coming out of this little slow curve, dojis at the bottom, they've broken through all resistance. That could have some good running room. And Pran is another one that everybody's been kind of watching. Pran, ever since it came up through the T-line, bouncing off the 50, you just stay long on this one. Haven't bought this one yet because notice it's not decisive trading, and we're just now at the Let me see if I can do this without goofing up too badly. It's right there, which makes it fairly easy to assess that if they open this positive, they're going to move it positive after a doji, and they're going to break out through this wedge type setup. That's when you want to be buying. NLNK also setting up. Notice how it's been trading flat dojis, kind of a setup for a cradle type pattern. I'd be ready to buy this on positive trading, because even if it breaks out through here at 30, the next target is 36.50, or basically about a 22% return, just popping up to that level. And then good possibility of filling this gap, which means they take it through the 50, which means then the next gap could be filled. You could have a good strong run on this one. Do you put much value on the wicks as you do on the bodies? No, remember, the Japanese rice traders have closed the open and the close because those are the final decisions. The first decision in the morning is where they open it. The final decision between all the bulls and the bears at the end of the day is where they close it. The rest of it, the tail, is just noise. However, you use the tails when it makes a formation, like a doji in the overbought condition. That's when it's time to get out of that trade. So the tails and the body, in this case, tell you something, whereas the tails during the day doesn't tell you much of anything. If it's just, remember, it's the close that tells us the information, the final piece of information. And let's see, we mentioned CONN. This one, with the slow curve, could be popping, getting ready to pop. There's a lot of some of the clothing stores are starting to come back pretty strong. AXLL, another gap up J-hook type pattern. This one I wouldn't be afraid to be buying on the basis that if it moved 7 points from here, you should be up in about the $51, $52 range on this one. And BE, no, that's that. BE. There's that little kicker signal. Right here at the resistance level, if this opens positive, your J-hook pattern will be in progress. BSBR. Ever since the little morning star scoop type pattern, you stay long on this one as long as it stays above the T line, with the expectation that you could be ready to fill this gap, which means you'd probably be close enough that they'd take it right to the 200-day moving average. All right, and AVAV is a perfect example of when you have that strong move and it consolidates. Now you're in that 45 degree, which was the same trajectory as what the trend was prior to this pullback, big whipsaw. You just stay long until you see a sell signal. Juniper has a good chart set up in that it's come back up, done a bearish engulfing signal. This is your blue ice failure. Falling through the ice, came up trying to find the hole you fell through. Whoever it was drowns, which was the bearish engulfing signal. Now you've got a doji. Makes this very simple. If they open this lower, you've got a left-right combo, a bearish doji sandwich, which tells you you're moving further away below the T-line. That makes your next prospect down here somewhere at the 200-day moving average. So that one, you want to be ready to go short on any weakness tomorrow. Let's see. And BBRY was a short that just hasn't gotten started one way or the other. If you're short, you stay short, but it probably by this time needs to open and trade lower tomorrow. If it opens positive and trades positive, you close out the short position, means it's not going anywhere. It's in here on the support level. Since the Japanese traders didn't have Western indicators, I assume the concept of overbought and oversold wasn't followed. What did they do with the wicks at the top of a trend? Well, the wicks at the top of the trend would have created either shooting stars or hanging men. It still produced signals, and they didn't necessarily need indicators. They could tell when they were at the top of a trend, because the trend would have told you they were at the top of a trend when they started seeing sell signals. We just have a more sophisticated way of analyzing it with computers. We shorted away a few days ago because it did a sell signal. It was a bearish engulfing signal on TCNet. But it was a bearish engulfing signal that closed below the T line, or not the T line, the 50, and showed that it was failing at the T line. Tells us more than likely they could take it all the way down here to the 200-day moving average. SPNC, which was a potential buy. Now you have a huge left-right combo and selling, and they're going to bring this at least back down to the 50, which isn't all that far, but it may have enough strength to push it right through. At least, if I was shorting this tomorrow, I knew at least I had a little bit of running room, probably about 10%. Down here to this area to see whether it's going to be a strong downtrend or whether I have to cover real quick. So there's some good short positions out there. TKMR was a good profitable trade on the way up. Now you had your hanging man Harami, followed by a bearish engulfing signal, followed by your doji sandwich, and a failure to get back up above the T line. This one could come back down and test the 50, which would be a 10% move, or it could even come down. If you put the Fibonacci numbers, I think they range all the way down in here somewhere as far as your pullback. And LCI left-right combo breakdown could possibly come all the way down here. So I'd like to see where they're indecisive and then they get decisive. That usually tells you they pulled the plug. Try to stay away from the biotechs on the short side because it only takes one little inkling of an announcement. This one closed below the T line and gap down. Good possibility they could take it down to the 200-day moving average. And this CYTR, is this what I wanted? No, that's not what I wanted, I don't think. Well, this looks good for a possible buy. Maybe I had CYTK, CYTX. Well, Shazam, how come I can't even read my own handwriting? Let's guess it was CYTK. But that isn't CYTK. Oh, okay. Where did that come from? Again, notice the dumpling top. Now you had your doji sandwich. This is what puts the force to the downside. More than likely, they can bring this all the way back down to that gap. And so a lot of the, if you're gutsy, you can short some of these biotechs right now. Smegmo did an evening star signal, kind of in a little inverted scoop pattern, and now forcing it to the downside. If they open this one lower, you can be shorting it because you got kind of that inverted scoop pattern, little inverted scoop pattern, possibly with enough strength to push it all the way down to the 200-day moving average. And things like BDSI, which were profitable trades on the upside, ever since the bearish engulfing signal at the top and the doji sandwich, now you've got that slow curve. They could be forcing this one down to fill this gap, more downside. And BCRX. Well, what was that? Same scenario. close back below the T-line, the slow curve, back down through the 50, could force you all the way down to the 200-day moving average. Which is better, sell to open or buying puts? Which is better, sell to open probably buying puts. So selling short depends on what selling a stock short. That's up to each individual. If you're a stock trader, you short the stock. If you're a option trader, you buy the puts. VIV, again, this is kind of an illustration of the bigger the signal, the more compelling there's been a change of investor sentiment. This one you could probably still be shorting with the anticipation that it's going to come down to the bottom of the trend channel. And SPLK, another one that's just rolling over, more than likely coming down to the 200-day moving average. We had FYEY a while back on the long side, and then it gapped down, did that 2-day reversal, island reversal, gapped down. Once they gap down and they can't get back up above the T-line, you just stay short until you see a sell signal. Let's see. Oops, sorry, I was moving stuff around here. That is PNM. That's not it. PWM. Well, for crying out loud. DWM. No, this one is. That's not it. DWM. I don't think that one is it either. So I'll go on to the next one. ESI. Well, this is getting more fun all the time. There's another one that looks like it's doing the bearish J-hook pattern. Left-right combo, gap down through the T-line. If it trades weaker, breaking this level, we could have another big, strong move to the downside. Notice how it came up and failed right at the 50, telling us we're still in a downtrend. And WABA, another one where you can stay short, but you're right here in the oversold area. So this is why you want to watch to see what goes on with the candlestick signals. Is what type of signal are they going to do here? They just filled this gap. They're at the 50. They're in the oversold area. If they keep heading lower, they're going to really break this down. So you stay short until you see a buy signal. You have an island reversal scan formula. I'm sure, John, that we have one. All we have to do is ask Ed C to do it. And let's see. I think that's about all I've got tonight. I did put a star next to this one. STAA. Well, because of the kicker signal. And BONT will probably be a couple that you'll see on the recommendation list for the long side. I'll have to check to see which ones on the short side look attractive. Let's see. Oh, we had puts in WYNN. Oh, for crying out loud. Well, I'll answer some questions here why this chart system is rejuvenating itself. When you see a downtrend below the T line with the GNC doesn't matter, it's always we did that one. Oops, I scrolled up too far. There we go. So as soon as it closed back below the T line, you stay short. But now we're doing kind of a hammer signal, right, with the stochastics oversold at the 50. So this is a case where, let's make this bigger. Very simple. If this opens positive tomorrow and starts trading positive, you close out the short position. Worst case scenario is going to come up and hit the T line and then fail, and you can re-short it. Best case scenario is they open it lower and take it down below the T line or down below the 50. And oops, still scroll it up, go too fast. No, actually we were shorting Wynn. I think somebody brought to our attention a few days ago when it was failing at the, as a matter of fact, I think it was up in here that we started shorting it. Here's wild turkeys. Okay. That is the highest percentage short stocks I've ever seen use site. Well, got to remember, we want to stay with the trend. Right up until last few weeks, we were in a nice steady uptrend. Then we started saying, all right, have a few more short positions added to your portfolio. Right now, we don't know which way this market's going. So you probably should have as many shorts as many longs in the portfolio. Which, again, the nice thing about the candlestick scans are, you're going to, out of 7,800 trading entities out there, you're going to find 3, 5, 7, 8, 10, 12, 15 good long positions. You're going to find 3, 5, 8, 10, 12 good short positions. So not knowing whether we're heading up from here or heading down or heading sideways, you're always going to have some good positions in both directions. So that way you're kind of offsetting your risk-reward factor. Even if the market turns up, you're still going to have stocks that are trading down because that was what they were doing prior to the market turning up. So even if the market turns around and heads up, there's going to be stocks that were trading weak because they were already weak. Doesn't matter what the market's doing. Conversely, there's other stocks that are trading strong, and they're going to head up no matter what. They may not head up as fast, or they may stop. But if the market all of a sudden turns down hard, the stocks that have good chart patterns that were heading up may just stall, give you time to get out of them, for the next, and then move money back over to the long or to the short positions. I'm doing my best to follow your methods, but I have many more positions stop out than make money. Is this due to the choppy market the past few months, or should I expect many little losses and eventually I'll see bigger winners? Marty, you'll see bigger winners. And again, you are now seeing in this market, starting right here, we're sideways. You've had up, you've had down, so you're going to have things stop out. Where you make your big money, you might not make as big money in here. And this is why you don't want to over analyze your positions. This is still a buy signal. Even though it's traded back below the T line, it's traded back just below the T line at the buy area. A lot different than if you were in the overbought condition. We've had buy signals. We really haven't had anything that told us there was any major downtrend. So what we do want to see is positive trading from here, obviously. And if it traded below the 50, you close it out. So there are times where most of my trades get stopped out. That puts me right back in cash with small losses. But when I hit big trades, I'm going to make some big, huge profits. And each time I put my money into a situation, it's because the probabilities say I'm going to make money. Sometimes I make 3%, sometimes I make 30%, sometimes I make 300%. But if a trade goes bad, hopefully I've gotten in and back out. I'm trying to see, gotten back out with a small loss, whereas my gains are usually pretty big. Do we use a Head and Shoulders in DRYS? How much credibility does it deserve? You can use other techniques. The advantage we have looking at other techniques is we can see exactly what's going on in investor sentiment, and we can see what other people are watching and what the sentiment is at those levels. So, do I use Fibonacci numbers? Definitely not. But I use them to say if something's pulling back, where is it pulling back to? Is it pulling back to a Fibonacci number? If I see a buy signal out in no man's land, at least I can put up the Fibonacci numbers and say, all right, is this where the Fibonacci people are buying? Is this why we have a buy signal here? Or I see a Morningstar signal right on a moving average. Is this where the people that buy on moving averages are buying? How long did it take you to become consistently profitable? I would say back when I started this back in the late 80s, I probably went through about 6 months of still trying to plow through my own emotional faux And I often tell the story that I was buying houses, renovating them, and reselling them in Atlanta, Georgia. And my schedule would be that night I'd sit and I'd look at charts, and these charts came in a book or a newsprint type book out of California. So I'd receive them Tuesday, and I'd sit there and I had a Quotrex, which is now all the same information we get on our phone, but it would show me what the high, low, open, close was, and I'd take a mechanical pencil and I'd draw it in on the right side of the page, and I'd sit there and say, all right, if I'm going to just use an example of what. Let's say I was in lean hogs, or I bought lean hogs, and I bought it here, and I would say, all right, if it trades positive, I stay in it. But if it comes back down through the open, or comes back down through the previous day's close, I should close it out. Well, I had my Quotrex, and I'd be riding down the road in my truck with the phone attached to the dashboard, and I'd watch it, and it'd go up, and then it would start coming back down toward where I told myself that's where I should stop out. And then I'd say, well, man, if I stopped out right here and then turned right around and went back up without me, boy, would I look stupid. I'll see if it stays, and I'd keep holding it and keep holding it and keep holding it. And finally, I'd have a big loss in the trade. And so I'd be crying as I went down the road, and there'd be people looking at me wondering why a grown man was crying as he was driving his truck down the road. So it took me about 6 months to finally kick myself in the head and say, do what the charts tell you, not what you're hoping it's going to do. So, again, the biggest problem that most of us have, and I say most of us, I put myself as a leader of that category, that my emotions were my biggest faux pas that I had to get through. Once I got confidence that the signals were telling me exactly what was going on, my emotions started disappearing out of my trades, and my profitability started becoming a lot more consistent. No, this was a chart books out of California. I can't remember what the name of it was, but this was before they had any charting on the computer. Yep, Hopium is bad. How many monitors do you use during your trading day? Bill, I've got 3 monitors. I got a 30-inch and 2 27-inches. I usually have the chat rooms over on one, and my accounts and the live screens over on the another. Then I'll pull up my scanning screens in the middle one. Do you think the Fed winding down the money flow is causing this toppy trading? Carl, that's too sophisticated a question for me. I don't know. and I don't care. I just want to see what everybody else thinks it's doing, and that's what shows up in the charts. Uh, Timothy, because I can scan and find the best trades each day in a matter of, in my case, probably in less than 5 minutes, but somebody that's still learning probably will take less than 20 minutes. I will find the best possible trades. I don't want to limit it to the universe, a small universe of trades. My universe of trades are stocks that are trading greater than 5 because I want to be able to margin every position I put on, and trading more than usually 200,000 shares a day. That allows me to get in and out without getting caught in a position. So that brings my universe down to 2,750 stocks, and it just takes a matter of minutes each day to find out which charts are the best for the next day. So I don't want to limit myself to 30 stocks or 60 stocks or 200 stocks. I want to see what's going on out there, and because I can find them in 5 minutes, I want to find the best possible trades each day. Any software and platforms, Timothy? That's a question you want to ask the chat room. I use Metastock. I use TCNet. I use Trades or Thinkorswim for my my small trading experimental accounts. And then I have got accounts at Fidelity. I've got accounts at Schwab. So anyway, a stutter step is when it starts up. Which one was a stutter step? Live could be considered a stutter step in that it started up, pulled back a little bit, stutter step. If it opened positive tomorrow and started up, this would have been just a little stutter step to get started. What is the scan criteria? My basic scan criteria is, with the market already in upward direction, I just scan for the biggest percent price moves each day, which are going to find the stocks that have either a breakout of a pattern, not necessarily stochastics in the oversold area. Now, if the market had been backing off and was starting to show signs of strength, then I use a scan of the my universe with stochastics in the oversold area. And then I sort it by which stocks had the biggest percent price move. Because essentially what that would be showing me is stocks that are in the oversold area where the buyers have already started coming in, confirming. And usually on that scan, within the first 30 stocks, which would take maybe less than a minute to run through to find the best trades. So I'm going to find 4 or 5 excellent situations coming out of the oversold area, either doji gap ups or ticker signals or something that showed strength that day. Oh, John, I don't know when we'll do the next 2 or 3 day training. We'll probably have a live. I don't know whether we'll do a private training session here in Pittsburgh in the next month or so or not. But we will have. If anybody's interested in the private training sessions, private training usually consists of 4, maybe 5 people at a time for a 2.5 day session. We usually do it up at Keuka Lake in central New York State. Everything's paid for. We feed you. All you have to do is get there. If you fly into Rochester, we'll come pick you up. Then we got 2.5 days on the lake. You eat well, and it's in a very relaxing setting where the learning process goes all day long instead of just in a hotel banquet room. It's a lot better for the learning process. Okay, let's see. With that, Jim, let's go ahead and do the double line. And Jim, let's go ahead and do the next double line. All right, I'll try to. There we go. All right. Alright, I gotta scroll. Maxwell observed the obvious. It closed below the T line. You want to be back out of this trade. It should have held the T line. Now you are on a support level. You should have closed it out. But if it opens positive and closes positive tomorrow, that tells you that you're back in an uptrend. You can always buy it back. QTWW. This one needed to open positive and trade positive yesterday, which it didn't do. This one should have been closed out for two reasons. One, you closed below the T line, and two, notice your trajectory. Your trajectory is sideways. There's no reason to be in this stock right now. IRBT, same scenario. This one you should be out of, possibly even going short, but I probably wouldn't short it because there's too much congestion right in here. USO, that's the U.S. oil, is that right? USO. This one, you stay long as it stays above the T line. Amazon, go short. This is the blue ice failure. You had your Doji, Hanging Man, bearish engulfing, bearish Doji sandwich. Your next target is probably here at the 200-day moving average. SYMC, this one, and these with a gap down, you should be out of it. You don't know what they're going to do here. You're still in a downtrend. I wouldn't do anything with this until it got back up above the T line. Price line, nah. Price line, you stay short. You had a left-right combo with slow bearish J-hook. You stay short. Good possibility they could bring this one down to the 200-day moving average. HTLD. This one, all you can do right now is stay long until you see a sell signal. Got a slow curve, and as long as it stays above the T line, you can stay with it. Best Buy, they had a nice slow curve also. This one, might not buy it today, but if it comes back up through today's open with another green candle, you want to be buying this one because it's telling you they're not going back below the 50. And Bank of America, nah. Bank of America is in a slow uptrend, but that's it. It's a slow uptrend. Right now that stock is just too stodgy or too slow to be going after. I'd be trading something else. And well, how do we do that? Smith and Wesson. This one is a slow curve. If this opens lower tomorrow, it's going back down to the 50. You can short it real quick. So if you're long, it has to open positive tomorrow to stay in it. You're starting to get this slow curve to the downside. And Abercrombie Fitch failed yesterday or Friday. If this opens lower, it's you want to be shorting it. CDR. This one you stay long. Ever since the left-right combo and breakout through this level and the breakout through the 50, you stay long until you see a sell signal. CVX. This one I wouldn't be long or short. It just doesn't have enough movement, number one. And when it does move, there's not enough magnitude of return on that one to be in it. TLT, the 20-year bonds, if they break this upper trend channel, that means interest rates are going to another lower level. And Walgreens, stay short. You are in the oversold area. You have hit the 50. I would stay short, but if it came back up through today's open, I'd cover it. That tells you the buyers are there. Kendai keeps getting whacked around. This one needs to, this one you should be out of at this point. It's still got potential of holding this level, but it doesn't look like it right now. This one you should be out of. And YOD. Oh, YOD. This one you should be out of. Anytime you see that doji right on the T-line and it closes lower, that tells you they're still going in that direction. You close out the position on that day. SPNC, this one's been getting whacked. This one you should have been out of on the big left or left-right combo that closed below the T-line. This one needed to open positive and trade positive. That's a combination statement, meaning even though it opened positive, it still has to trade positive. If it starts backing off, you've got to get ready to say, well, if it keeps backing off, where do I not want to see this trade? Definitely wouldn't want to see it trade below the low of the doji. Because that would be down below the T line. So that would tell me I'd want to be out at that point. And line stays short. There's your wave 1, there's your wave 2. Going into wave 3, and how did they get to wave 3? They gapped it down below any of the resistance levels. Moby, all you can do is stay long, but you do have a bearish engulfing. This one you want to see stay above the T-line. You know, if it closes below the T-line, you're out of it. JP Morgan. This one you stay long. Not a very exciting stock. Doesn't give you a big rate of return, but it definitely, if it's moving in the bullish direction, that means the market in general is probably not falling out of bed just yet. The Russell 2000, just like the NASDAQ, which they usually follow each other, or the Russell follows the NASDAQ, closed below the T-line. It's probably going to go down to the 50. There's probably some more selling in this area. GoGo, you want to be short, especially if they open this lower tomorrow. You want to short immediately because you've got a bearish doji sandwich in the making. iPhone, another one that you should have been out of today. You had that shooting star. Now you have a bearish engulfing signal that closed below the T-line. You should have been out of it. The fact that they took it down lower and couldn't get back up above it without creating any type of signal tells you want to be out of it. Now, there was others that sold off, but they came back up above the T-line doing a signal, like a hammer type signal. We did Q-Tech Electronic Arts for a short. Yes, you can be shorting this one. That's going to come at least back down to the 50-day moving average. And STT, STT. Doji sandwich that broke through the moving averages. This one you can be buying. That one's still got more upside. You've probably got a first target to fill in the gap right here. And LRCX. Little morning stars type signal with an inverted hammer. And remember, anytime you see that inverted hammer, is this what we wanted with robust coffee? Anytime you see that inverted hammer and then bullish confirmation, different one. This one also stay long. At this point, I would have probably have stopped out with it coming back down below the low of today or of yesterday. But I'd be ready to buy it back if it opened positive. So what's that doing for me? All right, maybe I missed out on $1.50, but this tells me I should be heading up for another $3 or $4. So that $1.50 was just insurance that I wasn't hanging on to something that was heading down a lot further. Whoops. That's not what we want. GGII. This one, you get ready to buy on positive trading. Just be aware of what your magnitude of return is. I guess it would be a good 15% up to this level. And RCII, looking to buy. All right, yeah, that's a good looking chart. If I was buying this, I'd probably want to buy it after it came up through the 50s. And GTIV, this one, you get ready to go short if it opens lower tomorrow. This one, if you want to buy it, needs to have a strong bullish signal tomorrow. GT bought at 9:30, got stopped out at 9:02. Bad trade or just didn't work yet. No, that was not a bad trade. Well, let's see. If you bought it today, yeah, I wouldn't have bought it necessarily today. I'd rather see a better buy signal than what you might have. Yeah, I don't think I would have bought that one today. Let's see. USU. Whoops. S.USU. This one just hasn't gotten started yet. I would rather see it do a J-hook pattern and come back up through the 50. If it does, then you've got a good prospect of going to the 200. HCP. HCP, I wouldn't be long or short. Well, I'd probably be more. No, I wouldn't be long or short this one. There's not enough movement one way or the other. It's more sideways. RDEN. Another one that I wouldn't be long or short. I'd rather pay 32 for this, knowing that it's headed for the 200. And Vail. Vail, this one you stay long until you see a sell signal. TRA. This one you can be buying on positive trading tomorrow. The doji gap up through the T line. And Meg had a good looking chart. This one you can be buying on positive trading. Even though it gapped up on Friday and came right back down, it didn't close below the T line. And notice where you're trading now. Above this downtrending channel and the 50-day moving average. Something sparked it. Profit taking. Now the profit taking's over. I wouldn't be afraid to be buying this one on strength tomorrow. CCOI. This one you get ready to buy on positive trading also tomorrow. Anytime you see a bearish engulfing signal, well, this is a left-right combo, but they stopped it today. So this tells me that this left-right combo or this bearish engulfing signal was the last gas selling. USMO. This one you stay long until you see a sell signal. And LUX. LUX, oh boy. There's not enough there to make me enter. There's not a trend to it. I would be trading something else. There's just nothing there that would entice me to buy that one. This one has a little combination, left-right combo, bullish, bearish confirmation. If this one opens weaker tomorrow down through the T line or through the 50, you want to be shorting it. And VRX, this one you can be shorting also on weakness with the anticipation it's going down to the 200. Sienna, I wouldn't be long or short this one. No direction. I think we did GoGo, didn't we? GoGo, you want to short this on weakness. I want to put a little star next to that one. it opens weaker tomorrow, you've got a slow curve or a bearish J hook and a doji sandwich, bearish doji sandwich setting up. This one you can be buying. That's North American Palladium. This one you've got that trend kicker signal. Broke out through the 50 and broke out through the last resistance at the 50. This one likely could get back up to the 200-day moving average. British Petroleum. Stay short until you see a buy signal, but you have had a gap down in the oversold area. I'd be ready to buy this when it came back up through the T line. UNG, the United States Natural Gas Fund. You stay short until you see a buy signal. Tesla's been, you stay short on this one, probably heading for the 50. Again, you had that doji sandwich right there at the T line. Neighbors, stay long until you see a sell signal. C's, yes, you can go short on this one. There's a kicker signal to the downside. Bearish J hook pattern. KORS. KORS. This one you can go short with the first prospect of being the 50, but if it breaks through there, you've got a gap to fill all the way down here, which more than likely means it will take it to the 200. Guild, stay short. Now, if this opens positive tomorrow, you cover your short position. It means they're going to bounce it back up to the T line. And Netflix, as you can see, after the left-right combo, it never closed above the T line. You stay short. More than likely, this is going to the 200. DHI. This one, I probably wouldn't be long or short. There's not enough movement one way or the other, and it's in a sideways mode. It's probably going to drift sideways until the 50 catches up. And JDSU, this one also needs to open positive and trade positive to stay in it. Otherwise, you probably want to be going short on this one. Whoops, need to scroll down more. DRYS, you don't want to be in this one. It's too low to short. You don't want to be in this one right now. Oh, I think I forgot to show that we showed that we wanted to be short Cracker Barrel, because Cracker Barrel has had a big down move, came up, failed at the 200 and the 50. Could have another big down move the same magnitude. We bought, we're buying puts on this one today. And DRYS, oh, we just did that. Mankind, you stay long, but it has to open positive tomorrow to stay in it. If it opens lower, it's going to be lollygagging between the T-line and the 200. But it needs to break out. Again, you can see you're in a wedge formation. So even if it breaks out through the 200, it eventually has to break through this level also. BWP. This one you get ready to buy, especially on a positive open. There's that slow curve. Now you've got a doji sandwich set up. As long as the volume is good on this one, good prospect of this coming back up toward the 50. Sears Holding. Sears Holding, stay long here until you see a sell signal and a close below the T line. This Allegheny, Atlantic Power, all right. It wouldn't be long or short this one right now. It's still in a downtrend, just kind of waffling along the T line. And GNN. This one you don't want to be in. After the bearish engulfing signal yesterday, you should have been out of it. Right now, there's no reason to be in this one. And CYTR. This one, you can get ready to buy. Obviously, it's important at the 200. Stochastics in the oversold area, lots of indecisive trading, but I wouldn't buy it until it does close above the T line. Telling you the bulls have stepped in. URI, all you can do here is stay long. I wouldn't trade this one just because of the lack of magnitude, but if you own it, you just stay long in it. AMCN, I think I said that right, AMCN, yes. Another one where you just stay long as it stays above the T line. And ASSA, this one is another one that you should be out of because it closed below the T line, number one. And number two, just be aware that the lack of magnitude of this one for price move. Goldman, unlike JP Morgan, this one's heading down. So this puts us, if JP Morgan is heading up and this one's heading down, that kind of tells us that the market doesn't know which way it wants to go. There's too much, I want to say, indecision going on. The Qs slowly rolling over. They have to open positive and trade positive tomorrow to show us that the T line is going to act as support. Tiffany's, I saw Tiffany's was being talked about by Kramer this morning. S.TIF, which is probably the kiss of death. Yep, there's your doji sandwich to the downside. This one's going down to the 200. Stay short on this one. Let's see. MDD just not coming up. Let me try it this way. MDDD. No, that one's not working. Trip, you can stay short on this one. There's that slow curve. Probably more to the downside to the 200. SKUL. This one you should have been out of today. It's lost its enthusiasm. They may be taking this back down to the 50. You can always buy it back on a positive trading. Away, you stay short on this one, looking for the 200 as the target. We did BWEN. This one needed to come back up above the T line, which it did. This one needs to open positive tomorrow to stay in it. Seco. This one needs to open positive to stay in it. If it opens lower, close out the position. And AXAS, stay long. It's even though you did a bearish day, it wasn't a signal, and it didn't even close below the 3T line. Let's see. NIHD. Another one I wouldn't be long or short until you see a strong buy signal moving it one way or the other. Just sideways. CQIS, this one you want to get ready to go short, especially if it opens weaker tomorrow. They're going to take it down to the 200. CSIQ gets a little star next to it for a short. And CPE, whoops, not copper, S.CPE. This one needs to stay above the T line to stay in it. If it closes below the T line, close it out. And DTU. Yeah. BTU. Doji Sandwich. You can buy this one on positive trading tomorrow, anticipating they could bring it back up to the 200-day moving average. Okay, Zenga. Zenga, you stay out of until you see a buy signal. You can't short it because it's, unless you did short it above $5, you stay short until you see a buy signal. SanDisk also has to open positive. If it opens lower tomorrow, they're bringing it back to the T-line, which means they're doing a bearish doji sandwich. Then you just definitely do not want to be in it. Starbucks, yeah, it's one of those where right now it wouldn't be long or short because of the lack of magnitude in the move, and right now lack of direction of which way it wants to go. NVDA, another one that I wouldn't be long or short because there's no direction to it. Marriott. This one, you stay long. You got a slow curve. If it opens positive, you've got a doji sandwich breaking out. This one you could be buying. Probably be buying the calls versus buying the stock. In CMG, this one you should have closed out today. Evening star signal with a close back below the T-line. One, because it closed below the T-line, and two, because the trajectory has disappeared as far as anything strong to the upside. Oops. GDXJ, this one you stay short till you see a buy signal. Okay, I think we got them all, didn't we? And it's, only 9:23. All right, last two. Maps. That doesn't seem to be working. Not found. Lift RPT. This one stays short. Okay, we'll call it a night. We have to see how they open these markets in the morning. And Doji right on the T-line for the Dows will tell us which way they're going to go on the open. Bill, it was good to meet you there also. All right, everybody have a good evening. We'll see you in the chat rooms tomorrow.